Hi guys, it's Sterling Spectier here. Welcome back to the Mining Show. Today is going to be the first episode of the Mining Show. It's basically going to be like a daily news thing from Monday to Friday where I just go over basically articles every day to do with Ethereum mining or Bitcoin mining or crypto mining in general. So let's head into the first story. This one comes from Crypto Slate. GPU mining could eventually be profitable after the Ethereum moves to proof of stake. So the first story goes over just Ethereum is by far the most popular cryptocurrency. However, there's little time left for Ethereum in its proof of work state. We all know that proof of work, is coming out in probably September, August time. So if we scroll down a little bit more, it talks about the Ethereum merge. The decline in crypto markets has made even mining Ethereum unprofitable for many miners. We did cover this yesterday in one of my videos, but people have been starting to buy Ethereum instead of mining it. A reduction in hash rate causes the mining difficulty to decline, thus making GPUs more efficient, yet the 10% decrease has done nothing to cover the other factors driving the profitability. So we have seen a decrease in hash rate and in difficulty. This is probably because people are getting off the network, but that still doesn't mean that it's not unprofitable to mine anymore. This information suggests that miners are turning off their machines as returns dwindle. Only miners who pay less than 0.235 kilowatt per hour using the latest generation of GPUs are currently able to turn a profit. So this is only for the most efficient GPUs such as like the 30 series and then the 16 series. So if you have any other GPUs mining Ethereum and you're at that price point, I would definitely turn them off. For instance, a mining rig made up of AMD Vega 64 cards, one of the most cost-efficient GPUs during the 2021 bull run, now requires an energy cost of less than 18 cents per kilowatt hour. Therefore, the question is, what are miners doing with their GPUs to move away from Ethereum? It then goes on to these other proof of work altcoins that can be mined. It compares these hash rates. Obviously, Ethereum's got 1.14 petahash, which is above terahash, I believe. Like when you get to like 999 terahash, it goes to petahash after that. So Ethereum's hash rate is at 1.14 petahash. Ergo's is at 12 terahash. XMR, Monero, is at 2 gigahash. And then we got Zcash at 8 gigahash and Ravencoin at 2 terahash. Then lastly, we have Ethereum Classic at 18 terahash, which is nowhere near the 1000 terahash that Ethereum has. To understand how we calculate which one of these coins could take up the mantle of the king of GPU mining, we need to understand the following formula. Price per coin times block reward times daily blocks, total daily income. So this is just how much actual blocks are mined in a day and how much they are actually worth in a day. As you can see, this table shows all of these. I'm not going to go through them all, but it says like daily here, Ethereum's making 22 million. Ethereum Classic's making 500,000, close to that. Raven is at 100,000. Another big one, Flux, is at 20,000. Without an understanding of the total mining revenue of each coin, it may be possible to miss that mining calculators are not showing you the relative hash power and income of various coins when they show you all these alternatives to Ethereum. Further, in a more positive bull run, this person calculated that even if all the crypto prices doubled and only half of the miners continued, the average GPU income would still be 30 cents per day. Realistically, is that going to happen? Probably not. The prices need to go way up and the miners still need to drop down way less for us to even make profits in this space anymore. The increase in hash and power distributed across the current ecosystem at today's prices cannot realistically lead to profitable GPU mining, as we've already known that. Yet GPU miners cannot surely rely on the merge to go badly to secure their future. Ristic used the history of Bitcoin to anticipate the increased adoption of another proof-of-work crypto. Supporting this thesis, Brian Mint, the Senior Director Advisory of Crypto Republic, told Crypto Slate the market will devise other ways of implementing blockchain consensuses and infrastructure supporting proof of work to address the void. Yes, that could happen, but we're not really looking at anything right now because no coins can support any amount of this hash rate, even at like 5% of the hash rate of Ethereum, these coins are all going to struggle, especially because of the increase in price of electricity and the decrease in price of the coins right now due to the oil crisis. Regardless of the math, many people are still champion GPU mining post-merge. The mining company NiceHash suggested that Ethereum moving to proof of stake will not be the end of mining. Obviously, it won't be the end of mining, it's just some projects need to be scaled up more for us to even make it profitable to mine. People that have free or even really cheap electricity will be mining still, but others that can't get access to anything like that won't be mining. And then it just goes on to conclude the article saying that the hashing power of Raven coin, if it increased by 500 times, it would be the most secure crypto asset to mine. But obviously 500 times is a lot. We can't really see that happening like anytime soon. So now let's move on to the second article, which is from Bloomberg, which is basically going over the same thing as well. Ethereum mining is going away and miners are not happy. The Ethereum mining community is a diverse bunch geographically and demographically. It just goes over examples of people who have been mining and supporting their income through mining. It just says a 28-year-old translator in Ukraine is running computer hardware to earn more so he can buy clothing and other necessities. People in Argentina, college students in Canada. As many people from even outside the blockchain will know, a crash in the crypto markets has made the past few months quite painful for anyone whose financial well-being is tied to the currencies. As of June 15th, the price of Ethereum was down around 70% of the year. At the same time, a lesser-known factor, a tectonic shift known as the merge, is set to end Ethereum mining altogether. We've kind of just been over that. It goes on to say Ethereum and Bitcoin, the two largest cryptocurrency networks by market value, and the proof of work is just a contest to make computers work hard. This is just like going over how Bitcoin mining and GPU mining actually happens. So it says here the merge is expected to take place in August, although no official date has been given. It's already been pushed back multiple times and many miners hope that it will happen again. Somebody's quoted saying, "I don't think they're going to be able to pull it off anytime soon." The cheap operating sister at Hive, an industrial Ethereum miner. But other people involved with the Ethereum see the merge as inevitable. Obviously, in my opinion, I think it's inevitable. It's only a matter of time. I know they did start it back in 2019, but they always had this merge to proof of stake in mind because of the difficulty bomb that was on the Ethereum programming. So they already knew that they were going to switch to something at some point. It's just been taking a longer time, even with people getting laid off work, people working from home. This kind of stuff just got in the way. So we are looking at around August, September time. Maybe it will get pushed back a little more, but it always happens to be pushed back until it actually doesn't, and then the merge will go through. It says, despite all this, miners are actually expanding their operations. Prices on GPUs have dropped more than half since the start of the year, leading to a surge of purchases. Ethereum's hash rate, a measure of how much mining power is supported in the network, has doubled in the last year. So it just goes on to say that despite all this, miners are actually expanding our operations. So I know a lot of people who are actually taking advantage of this low GPU prices and getting in on really low GPU prices right now just to expand their mining rigs. Because no matter what, in the future, mining will still be profitable at some point. And because they have all these mining rigs, it's like the 2018. After 2018, people were like, no, crypto mining's dead, it's done. But now here we are saying it's done again. So, in 2 years, we could have it back up again and running, and we could be making profits. And if you bought the GPUs right now, you could be making loads of profits off it, just because they're so cheap right now and they could go up in the future. So as miners won't be left with nothing after the merge, their mining setups will still be powerful computing devices that can be put to use elsewhere. We have things like proof of use for work coming in with Flux and stuff like that we can actually put towards our mining power. We can put it towards something else that will pay us in crypto. So let's now get into the third article that we have here. Bitcoin's hash rate shoots up to an all-time high amid crash. Bitcoin mining hash rate surges to an all-time high amid crashes. According to the latest weekly report from Arcane Research, the Bitcoin miners' revenue continues to suffer as the price crashes and the competition becomes all-time high. The hash rate is an indicator, we already know that. When the value of this metric rises, it means more mining rigs are coming online, which leads to an increase in competition. The results in smaller Bitcoin revenues for everyone involved, as the rewards are fixed and shared between the active hash rate. On the other hand, a decrease in the indicator's value implies miners are shutting down some machines, possibly because of their mining revenues not being able to pay off electricity costs. As you can see the above graph, the Bitcoin mining hash rate has gone up over the last few days and has now made a new all-time high. So yeah, we can see here that we're at a new all-time high for Bitcoin hash rate mining. This is probably because everyone's trying to mine as much Bitcoin, actual physical Bitcoin, like the number, right now, because it's so low, they're getting way more rewards. So more people are trying to mine more Bitcoin in the hopes that there will be a bull run in the next 2 years in which they can sell that crypto off. Because right now it's really cheap, it's around 20,000 per coin. So this is just people actually preparing for the future, and they're seeing that Bitcoin is probably going to be around for the next 100 years, obviously. So they think that if they mine now, they'll get more Bitcoin now, and they'll start to sell it off later when the price goes up. Miner revenues had already been on the decline, but the crash combined with the hash rate reaching new highs means further shrinkage for their profits. As I said, yes, profits are going down, but the actual amount of Bitcoin they mine is more. As you can see, it just goes over the Bitcoin price here. So overall, Bitcoin mining, it is a good thing, and I'm currently getting paid out in Bitcoin by 2 miners. Because I'm getting paid out in Bitcoin, I'm getting paid out in more physical Bitcoin than I would 7 months ago. So I'm just holding on to that until the price does go up. Now let's get into our third story about Bitcoin. Over 75% of Bitcoin miners' earnings go into soaring electricity costs. We just went over why Bitcoin, why people are mining. So obviously new miners are going to be paying a lot for electricity right now in these, times of crisis. New Delhi Bitcoin miners are spending greater than 75% of their earnings in hovering electricity prices. Bitcoin mining is really electric intensive, of course. A latest examine has proven that single Bitcoin transaction consumes around 2,165 kilowatts per hour of electrical energy, which a daily family would use within 74 days. Issue within the roughly 0.14 kilowatt per hour that a median family pays. It says here that Bitcoin mining is central to the sustenance of the Bitcoin ecosystem as in addition to enabling verification of transactions. It helps save the community. I don't really know what it means by that. The exercise is so essential that the Bitcoin community incentivizes miners within crypto via miner rewards. Obviously, we know how crypto mining works. It just goes on to say how proof of work actually works. And then it says that proof of work has additionally come beneath crisis for its environmental footprint, and critics maintain that it's a wasteful and unsustainable crypto for the universe. Research has proven its carbon emissions to match those of total nations. Yes, we've been over that. It also goes on to say that Bitcoin, emits enough energy to power a small nation for a year. Bitcoin is hardly mainstream, but it's surely already registering a big carbon footprint that is actually worrying its opponents. They declare that the broader adoption of the coin would considerably affect the worldwide setting negatively. Bitcoin lovers nonetheless imagine within the crypto's worth. I don't really know what it means by that. They maintain that, however, the environmental considerations it utilizes raising. It just goes on to say about the environmental impact of Bitcoin, and, personally, in my opinion, I think that Bitcoin is actually driving economies, like small microeconomies of cities and states. Just think about if they shut down everything in China, some states might not be spending enough energy anymore because they were paying for so much energy back then. They were creating so much, it was driving the economic growth because they had to power these Bitcoin mining farms. And now that they've turned off, they've lost a lot of money from it. So I think Bitcoin mining overall is good for, the economic growth, but obviously the environmental factors are very bad. Now let's finish up with a quick article. This is just a crypto mining chip manufacturer, and they're starting to apply for IPOs in America. Just if you're in the mining space, you might want to know about this. So it's Nano Labs is a Chinese crypto mining chip manufacturer. They basically make like ASICs and computer chips for ASICs. it just says here that they're having an IPO initially to raise $50 million to IPO. Nano Labs was followed by Kong Zhangping, I think I said that right, former co-chairman of Canaan, and its main income is derived from mining machine sales. According to the company's prospectus, AMTD Global Markets, Maxim Group, and FinTech are its joint underwriters. I don't really know what any of these people are, but it just goes on to say that, they're IPOing. So, it could be good for the crypto space because people are even getting more into this. As soon as crypto has this adoption from the banks and, the actual government facilities, that's when you can see the real growth in the market. That's when we're going to see like Bitcoin hitting 100k a coin, or Bitcoin even hitting like 200k a coin. So that's it for the mining show. I hope you guys enjoyed. We'll be doing this every day from Monday till Friday. If you did, please like and subscribe to the channel and leave a comment below on what you think of any of these articles. Also, if you want to check out any of the articles, I put links in the description below.